This is the iPhone 17. It is, by any measure, a masterpiece of engineering and design, but it comes with a masterpiece of a price tag. For the base 256GB Pro Max model, Apple is asking for $1,199. That price lands in a world still grappling with a persistent cost of living crisis. In 2025, economies are navigating a precarious state of stagflation, a toxic mix of rising prices and weakening growth that puts a strain on household budgets. For many, a $1,200 phone is not just a purchase, it's a major financial decision. This raises the central question, the one that will drive our entire investigation. In a world where every dollar counts, how does Apple justify this price? More importantly, when you hand over your money for this device, what are you actually paying for? We're going to follow the money. From the microscopic transistors inside its processor, to the sprawling assembly lines in India, and into the secretive boardrooms in Cupertino. This is the complete financial teardown of the most profitable product in human history. To begin our journey, we have to look inside. Every physical product has what's known in the industry as a bill of materials, or BOM. It's the shopping list for a global corporation, a detailed breakdown of every single component, from the screen you touch to the tiniest screw holding it all together. This is the first, most tangible layer of the iPhone's price. It's the cost of the stuff. Based on teardowns of previous models and supply chain analysis, we can build a remarkably accurate picture of what it costs Apple to source the parts for this very phone. The first thing you notice, and the single most expensive component in the iPhone 17 Pro Max, is this stunning 6.9-inch ProMotion OLED display. It's brighter, more efficient, and more responsive than ever before. But here lies the first great irony of the global supply chain. This brilliant window to your digital world, the key to the entire iPhone experience, is manufactured by Apple's fiercest and most bitter rival, Samsung. This complex relationship of frenemies is built on mutual necessity. Apple needs the best screens in the world, and Samsung Display is one of the only companies that can produce them at the scale and quality Apple demands. Samsung, in turn, gets a colossal, multi-billion-dollar contract from its biggest competitor. It's a fragile but essential balance of power that underpins the entire premium smartphone market. The cost of this component reflects its cutting-edge technology. The display in the iPhone 16 Pro Max was estimated to cost around $80. With the improved brightness and efficiency of this new panel, we estimate the cost for the iPhone 17's display has risen to approximately $130. If the screen is the window, the processor is the engine room. And at the heart of the iPhone 17 Pro is this, the Apple A19 Pro. This tiny piece of silicon is more than just a component. It's the culmination of decades of research, billions in investment, and the very soul of Apple's competitive advantage. It's built by the Taiwan Semiconductor Manufacturing Company, TSMC, the quiet giant that turns Apple's chip blueprints into reality. At the core of the iPhone 17 Pro is Apple's A19 Pro, fabricated on TSMC's latest 3nm class N3P process. In practice, that node lets engineers pack more transistors into the same sliver of silicon while tightening how power and signals move through them. More density plus smarter layout equals higher performance per watt in a device that still fits your pocket. TSMC's N3 wafers are widely reported in the high teens of thousands of US dollars per 300mm wafer, reflecting the leap in lithography and materials at this class. Nanometer isn't a literal ruler mark anymore. It's a signpost for a bundle of advances, device geometry, materials, design rules, that together unlock headroom. On N3P, Apple stretches that headroom with architectural tweaks, wider and deeper CPU/graphics pipelines, bigger caches, faster interconnects, and a neural engine tuned for on-device AI. The result, borne out in independent testing, is a generation that's approximately 11 to 12% faster on single-thread CPU with a 37 to 40% GPU jump versus last year's Pro, gains you actually feel in sustained workloads thanks to better thermals on the Pro chassis. Now the money question. What does the A19 Pro cost? Start with the wafer. Credible industry reporting pegs, TSMC's 3nm wafers, around $18,000 US. Some estimates run higher depending on mix and terms. From there, the silicon math depends on die area and yield. Analysts measured A18 Pro at approximately 105 square millimeters. A19 Pro, with larger GPU/NPU blocks and caches, is commonly estimated a bit bigger. On a 300mm wafer, a approximately 110 to 120 square millimeters die implies roughly 500 plus potential placements before edge losses. Usable dies are lower after scribe lines and test rejects. If you assume a mid-ramp yield, purely illustrative, the raw silicon cost per good die lands on the order of a few dozen dollars. That back-of-the-envelope tracks with teardown-based BOM work. For last year's Pro Max, analysts estimated the SoC itself around $45 inside an overall manufacturing cost near $485, suggesting a 19 Pro's silicon share is significant, but still only one slice of the phone's total cost. Two more cost multipliers matter this generation: advanced packaging and binning. After the wafer is diced, each die is tested, graded, and then mounted in a thin, high-performance package that must move lots of current, feed fast memory, and shed heat without adding thickness. Yields at package level, plus Apple's tight binning, shipping only parts that meet its performance efficiency targets, drive real dollars. It's exactly why cutting-edge wafers are pricey in the first place, and why Apple and TSMC invest so heavily in process control. Zoom out, and the story is simple enough for anyone. Apple designs the brain, TSMC mints it on N3P, wafer prices at this class are eye-watering, and the A19 Pro's silicon, while costly, is just one piece of a broader bill. Display, cameras, storage, enclosure, radios, and labor add up fast. The magic is turning that expensive stack into battery life, frame rates, and on-device AI that you can feel every day. This staggering cost creates an enormous economic moat. The investment required to be the first customer on a new process node is so immense that only a company with Apple's scale and cash reserves can afford it. Competitors like Samsung and Google simply cannot place the massive, guaranteed, multi-billion-dollar orders that TSMC requires to justify building a new fabrication plant. In effect, Apple is not just buying a component, it is buying a 1 to 2 year technological monopoly over the rest of the industry. The high price of an iPhone is, in part, the cost of strategically excluding its rivals from the cutting edge. The next major cost center is the completely redesigned triple-lens camera system. This year, the Pro Max features a 48-megapixel main sensor, a 48-megapixel ultra-wide, and, for the first time, a 48-megapixel telephoto lens with 5 times optical zoom. These critical image sensors, the digital film that captures your photos, are designed and built by another key Apple partner, Sony. The camera module for the iPhone 16 Pro Max cost an estimated $80. With the significant upgrade to the telephoto sensor and other improvements, we estimate the cost of the iPhone 17's camera system at $105. Rounding out the hardware are the other essential components. First, there's the memory. The price for high-speed NAND flash storage is notoriously volatile, but the trend in 2025 is upwards. Surging demand from the AI industry and deliberate production cuts by major manufacturers like Samsung and SK Hynix have tightened supply. We estimate the cost for the 256 gigabytes of storage in the base model at around $30. Next is the casing. The iPhone 17 Pro Max continues to use a grade 5 titanium alloy for its frame, which is significantly stronger, lighter, and more difficult to machine than the aluminum used in standard models, making it more expensive. We estimate the cost of the machined frame and the ceramic shield glass at $80. Finally, there's the battery. Lithium-ion technology is mature, and while crucial, it's one of the less expensive components inside. We estimate the battery cost at $20. So, let's add it all up. When you tally the cost of the screen, the processor, the cameras, the memory, the casing, and the battery, you arrive at a total bill of materials. The estimated cost for all the physical parts inside an iPhone 17 Pro Max is approximately $460. Our $460 pile of components is still just that, a pile of components. The final step in creating a physical iPhone is assembly. This is the intricate process of final assembly, testing, and packaging, or FATP. For the iPhone 17, this step increasingly happens in one country, India. The cost for this final, human-intensive step is surprisingly low. While labor costs in India are significantly lower than in China, expert analysis suggests the highly automated nature of modern assembly lines makes the final cost per unit remarkably similar between the two countries. We estimate the cost of assembly and testing for a single iPhone at around $20. This brings the total physical cost of the iPhone 17 Pro Max, parts, and labor, to $480. But this raises a critical question. If assembling the phone in India doesn't offer significant cost savings, why is Apple undertaking such a massive, complex, and risky strategic shift? The answer has very little to do with saving money for the consumer. It has everything to do with geopolitics. The move to India is a strategic de-risking, an escape plan from the escalating trade war between the United States and China that has simmered for years. This is Apple's China Plus One strategy in action. The goal isn't to abandon China entirely. Its supply chain is the most sophisticated and deeply integrated manufacturing ecosystem the world has ever seen. Instead, the goal is to build a resilient, parallel supply chain in a friendly country to mitigate the risk of tariffs, political instability, or a full-blown conflict. The scale of this pivot is staggering. In 2025, India is on track to produce between 20% and 25% of all iPhones globally, with a long-term goal of reaching 50%. This is being made possible by Apple's key manufacturing partners, Foxconn and Tata Electronics, who are investing billions into massive new facilities in Bengaluru and Hosur. However, the Made in India label is, for now, somewhat misleading. While the final handshake, the last step of assembly, is happening in India, the vast and complex supply chain for the more than 1,500 components inside the phone remains deeply rooted in China. Even the new Indian factories rely heavily on Chinese-made components and machinery. The shift is a geopolitical hedge for the most politically sensitive part of the process, not a true decoupling from China's manufacturing dominance. This move is so significant it's forcing a rapid maturation of India's industrial base, but it also presents enormous risks for Apple. The company is trading the predictable efficiency of China for the developmental uncertainties of India. Reports have already surfaced detailing the challenges: a less experienced workforce leading to lower production yields, significant quality control issues, and logistical and infrastructure bottlenecks. Apple is making a high-stakes gamble, trading one set of geopolitical risks for another. So far, we've only accounted for the physical phone in my hand. It costs Apple about $480 to source the parts and assemble them. But that's less than half the retail price. So where does the other $719 go? The answer lies in the massive intangible costs that are spread or amortized across every single one of the roughly 232 million iPhones Apple sells each year. These are the hidden billions. The first and largest hidden cost is research and development. Apple's annual R&D budget is a mind-boggling figure, now exceeding $33 billion per year. A huge portion of that budget is dedicated to a single division, Apple Silicon. The bleeding-edge performance of the A19 Pro chip doesn't just happen. It's the result of years of cumulative investment. For context, the design and initial tape-out phase for a single chip family like the M3 was estimated to cost over $1 billion alone. When you spread that massive $33.4 billion annual R&D budget across the 232 million iPhones sold, the amortized cost comes out to approximately $145 for every single device. This is the cost of the ideas inside the phone. Next is the software. iOS is arguably one of Apple's most valuable assets. It's the seamless, secure, and simple operating system that defines the user experience. But it is far from free to create and maintain. iOS is the foundation of Apple's infamous walled garden, the tightly integrated ecosystem of hardware, software, and services that creates a powerful lock-in effect for customers. Maintaining this ecosystem, with its army of software engineers, project managers, and quality assurance testers, not to mention the infrastructure for the App Store, iCloud, and iMessage, is a colossal undertaking. While Apple doesn't break out the cost of its iOS division, we can create a conservative estimate. Developing a single complex app can cost over $250,000. An entire operating system for over 1 billion users with a global developer program costs billions. We'll conservatively estimate the annual cost of the iOS and related software services division at $30 billion. Spread across 232 million iPhones, that's an amortized cost of $130 per phone. This is the price of the experience. Finally, there's the cost of making you want one. This falls under a line item in Apple's financial reports called Selling, General, and Administrative Expenses, or SG&A. This is a catch-all for everything from Tim Cook's salary to the electricity bill at your local Apple store, but its biggest component is marketing and advertising. Apple's annual SG&A budget is over $27 billion. This money funds the company's iconic marketing campaigns, which masterfully build mystery and hype, transforming a simple consumer electronic into a cultural touchstone and a status symbol. When we amortize that $27 billion budget across annual iPhone sales, it adds another $115 to the cost of each phone. This is the cost of desire. This financial model has made Apple one of the most successful companies in history. But it's not without its critics or its risks. The most persistent criticism leveled against Apple revolves around its enormous profit margins. On a device like the iPhone 16 Pro Max, the gross margin was nearly 60%. This raises an uncomfortable question. In a global cost of living crisis, is it ethically justifiable to charge such a massive premium? Apple's defenders would argue that these high margins are the engine of innovation, funding the massive R&D that pushes the entire industry forward. Critics, however, argue that these margins are the product of anti-competitive practices, leveraging a powerful brand and a locked-in ecosystem to extract maximum value from consumers who have limited real choice. This leads to the walled garden itself. The seamless integration between an iPhone, an Apple Watch, a Mac, and services like iMessage and iCloud is a powerful feature. But it's also a powerful economic weapon. It creates incredibly high switching costs. If you're an iPhone user, moving to an Android device like a Samsung Galaxy S25 or Google Pixel 10 means losing access to years of app purchases, breaking up iMessage group chats, and finding new ways to share photos with your family. This ecosystem lock-in makes customers far less sensitive to price. Because leaving is so difficult and disruptive, Apple can continue to charge premium prices, even when competitors offer devices with comparable or superior hardware for less money. We've followed the money from the silicon wafer to the software code. Now, it's time for the final accounting. We can finally build the complete price stack and answer our central question. When you pay $1,199 for an iPhone 17 Pro Max, what are you actually paying for? We start with the retail price, $1,199. First, we subtract the cost of the physical phone itself. That's the bill of materials and the final assembly in India. That comes to $480. Next, we subtract the amortized cost of the ideas inside the phone, the massive research and development budget that funds Apple Silicon. That's another $145. Then comes the cost of the experience, the billions spent developing and maintaining iOS and the entire software ecosystem. We subtract $130. After that, we account for the cost of making you want it, the global marketing, sales, and administrative machine. That's $115. When you subtract all those costs, the hardware, the R&D, the software, and the marketing, you are left with the final and largest slice of the pie. On every $1,199 iPhone 17 Pro Max it sells, Apple makes an estimated gross profit of $329, a margin of over 27%. When you buy an iPhone, you are paying for far more than just hardware. You are funding one of the largest and most ambitious research, software, and marketing operations on the planet. And you are contributing to one of the largest profit engines in the history of capitalism. The iPhone is the ultimate story of how cutting-edge technology, a locked-in ecosystem, and masterful brand power combine to create a product that is, for now, unlike any other. But as Apple bets its future on a massive manufacturing pivot to India, can it maintain the exacting quality that justifies this price? As competitors finally begin to close the technology gap, can brand loyalty alone sustain these margins? And as the world continues to navigate deep economic uncertainty, how long can the price of a masterpiece continue to climb?